Good morning, guys. Happy Wednesday. So I hope you all had as much fun last night as I did. That's always crazy, and I love the hell out of it. So, just a reminder to all those of you guys that won, please make sure to email me mailing addresses and your screen name so I know who it is. Okay, so kind of go through there. Other thing I'm going to request of everybody, seed boxes. Please let me know when you receive it. We are having an issue with one box disappearing all of a sudden and trying to figure out where it is. So maybe we can get track down the person who has it and get this thing moving along here. Trying to do this to help everybody, and it doesn't help everybody if people sit on the box. So that being said, all right. So what I want to talk about here is thievery in plain sight. Now, by now, you all know the whole Build Back Better $350 billion, whatever the hell, $3.5 trillion. I'm sorry, I forgot a zero there. $3.5 trillion debacle that the Democrats are trying to push through. And of course, there's two different factions within the Liberal Party, the stupid ones and the communists, and they can't figure out what's going on. But somehow, some way, this is all going to get paid for. No matter how many times Joe says it won't cost anybody anything, as usual, he's wrong. Okay. So this is the latest, and I want to tell you how it affects you because it doesn't get reported in the news. Okay. So Janet Yellen, everybody's favorite finance guru, however you want to put it here, okay, Treasury Secretary. Her latest scheme to pay for this, and remember, Janet Yellen is a bleeding liberal, okay? There's nothing neutral about her whatsoever. Her idea is to tax unrealized gains. Now, typical of the way the left portrays this will only matter to billionaires, okay? And what they're trying to do is eliminate what's called a stepped up cost basis for transfers of assets upon death, okay? Now, we all know the death tax has existed forever. You die, you still got to pay taxes, okay? But let me explain to you what a stepped up cost basis is. And I know it's a little wonky here, but we're going to get into it. Let's say, for example, you bought 100 shares of Amazon back in the late 90s, okay, for $5. You put $500 in Amazon. You've never sold that 100 shares of Amazon. Amazon's now, what, $3,000 or something like that? So that 100 shares is now worth, what, 300 grand? You paid $500 for it, okay? It's now worth a hell of a lot more money. If you sell it, you have to pay a boatload of capital gains on it. But if you leave it to your kids get what's called a stepped up cost basis, or any area. You leave it to your wife, whatever it would be, okay? Your husband, not to be choosy. They now own that stock with the price it was on the day of your death. So if you died today and it was $3,000, they now own 100 shares with a cost basis of $3,000. And if they sell it tomorrow at $3,001, they only have to pay taxes on $1 of profit, $100, $1 times 100 shares. That's what stepped up cost basis is. They want to get rid of that first off. Okay. And again, they're saying that they want to do this for billionaires. Well, let's start thinking about businesses, ones that come up, people that own farms, okay, wineries, cattle ranches, whatever it would be, okay. Those properties, just the land itself, is worth a boatload of money, okay. Now, if this goes back a couple of generations, think what could happen along down the line. Now, let's say instead of Amazon being $3,000 in my example, let's say it's $30,000. nobody would ever sell it because the capital gains tax would kill them. All right? You'd give most of your profits to Uncle Sam. So what Janet Yellen has decided to do is she wants to tax unrealized capital gains, meaning you have to pay taxes on your paper gains, what you have in your account. You put $1,000 into an account, you bought a couple of stocks, whatever it is, it's now worth $2,000. You didn't sell it. On paper, you're worth $2,000. She wants to tax you at the end of the year for the $1,000 that you never even cashed in. Okay. That's what they're saying it will be. I want you to think about this. This is also an end run around those people who've bought, say, Bitcoin. Okay, people making a lot of money in Bitcoin. If they're trading it, okay, it's taxable. It's capital gains. This is where it's the scary part, guys, and this is how it affects all of us. Your house. You buy a 30-year. You buy a house. You get a 30-year mortgage. Why? Because your income hopefully will be growing over the course of the 30 years that you're paying off the house. The house value will also increase over the time. And you're still paying, right now, if you're just paying off your house, you're still paying, you're finishing paying off a house you bought in 1990. Okay. Prices in 1990 were a hell of a lot cheaper than they are in 2020, 2021, okay, whatever it would be. Well, what Janet Yellen wants to do is tax you on the appreciation of your house. Why? What happened to the real estate market last year? Ooh, the real estate market went up quite well. What's happened to the real estate market this year? Oh, it's gone up quite well. So now at the end of the year, I've been in my house all year, okay? Whatever the value of my house was on January 1st, and whatever the value of my house is on December 31st, determined by who, I have no clue, okay? Because even those little things you get in the mail and what Zillow says my house is worth and what Redfin says my house is worth are completely different, okay? They want to tax me on that money. Haven't sold my house, done anything like that, but that's now supposed to be taxable income, so it's more money I have to pay. But here's the catch. Let's say, for example, my house, $200,000 at January 1st, 2021, is worth $250,000 on December 31st. I'd have to pay taxes on that $50,000 in unrealized capital gains. Here's the rub. On January 1st, 2022, it's worth $250,000. On December 31st, 2022, if it's back down to $200,000, oh, that's not a tax write-off. So every time your house goes up, you have to pay taxes, but every time your house goes down, you just got to suck wind on it. Tell me if that isn't the biggest scam ever, because now what you can have is the Fed, everybody's favorite here, manipulate the housing market to raise your taxes. All this stuff we go back at, guys, okay? You never own it. You're always paying taxes on it. This is a way they are trying to break you from your house without any money ever changing. The only money that ever changes hands is you give it to them. I want you to keep an eye on that one, because if this one gets through, we need to raise hell in Washington. I know, I'd say have a nice day, but that's a pretty pissy way to finish one. Enjoy your Wednesday. Pinball out.